Hello, I'm Rhonda Porter with this week's episode of The Mortgage Porter for the first week of November 2025. Optional Blue shows that mortgage rates as of Friday, October 31st, averaged about 6.156% for a 30-year fix, so unchanged from my previous report. And I'm going to point out the VA rates again because look how low they are, 5.670 for the 30-year. So the next time you have someone who is presenting a VA offer or a buyer who, if you're a realtor who wants to use their VA loan, please let them. The rates are typically better than conforming, and there are a lot of other benefits for them as well, such as no monthly mortgage insurance. And if you got a mortgage around this time or your rates are 7% or higher and you have mortgage insurance on it, it might be time to start looking at a refinance or at least talking about it. It's important to be ready if you are in the refi market because rates do tend to move up higher much faster than they come down. So in these rates, it's important to keep in mind are in average, and they are from about 35% of the market, and that's the lenders who use Optional Blue when they go in to lock an interest rate. And so we don't know how these rates are priced, if they're including points or what somebody's credit scores are or what the loan to value is, among all the other factors that go into pricing a rate. So if you'd like to have a rate based off of your personal financial scenario, please reach out to me. I am happy to help you. It's the first week of November, and typically it's jobs week. However, it looks like we're still missing the BLS jobs report. And this means that the ADP report will carry extra weight, and it's not anticipated to be coming in very strong this week. In light of the BLS report not being available, ADP has announced that it will release weekly employment data. So that'll be interesting to see how that works out. And the next Fed rate decision is on December 10th, and odds are currently around 65% that we'll see another quarter point reduction to the Fed funds rate. It's about 10 a.m. on Monday as I record this for you, and mortgage-backed securities are pretty flat. They're down about 2 basis points. The red arrows on this chart indicate the two last Fed meetings, and last Wednesday we had the wrap-up of our last meeting, and Fed Chair Powell, as expected, announced the Fed funds rate was being reduced by a quarter point. But guess what happened? Mortgage rates did not go down a quarter point. So this is because the Fed does not directly control mortgage rates. In fact, mortgage rates actually trended higher, as you can see with these red candlesticks. And markets reacted to comments made by Fed Chair Powell following the rate announcement regarding the potential rate cut at December. He said, quote, "Not a foregone conclusion, far from it." So I know the red dash doesn't look that great. Rates are still low, as you saw earlier in my report, but they're just not trending lower at this time. Our next Homebuyers workshop, we're going to dig in deeper on qualifying by taking a look at your income, employment, and debts. And so this is going to take place on Wednesday, November 12th from noon to 1 p.m. You do need to register at mortgageporter.com and click on the classes and workshops tab at the top of my page. This is in a webinar format, so you don't need to be on camera. In fact, you won't be on camera, and so you can enjoy your lunch and just watch the workshop and ask me questions via chat. So recordings are also available afterwards to those who register, so be sure to sign up today. And if you're thinking about buying, selling, refinancing, remodeling your home, restructuring a debt, or a reverse mortgage, I'm happy to help you, even if it's months away. You can't get started too soon, and it's really important to take a look at your credit and budget so that we can create a game plan for you. So I hope you have a great week. Be sure to check out my blog, The Mortgage Porter, and subscribe for weekly updates. Take care, and I hope to talk to you soon. Bye-bye.